Has Bitcoin stopped falling? What opportunities are there? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. Complete KYC and deposit $500, and you will get a $1,000 Ethereum position. They'll even set it up for you. Just click the link below, and you'll be taken to this webpage. After completing KYC and depositing $500, you will receive the position. You can choose to go long or short, and you will get it directly. But hurry, time and availability are limited. Now, let's take a look at the Bitcoin market. Let's look at Bitcoin. Here, we can see a head and shoulders pattern on a daily chart. The neckline of this head and shoulders pattern has been tested. As you can see, the current price is testing it. We have a left shoulder here, a head here, and a right shoulder here. And now the price is hovering around the neckline. If this level is broken, we'll likely see a significant pullback. Now, the most important thing to consider is whether the support around 27,000 can hold. Let's see this support. If this support fails, the current bull trend could be completely broken. Okay, if this support is broken, it may take a while before there is another opportunity to enter the market for long positions. However, if the support at 27,000 holds, the price further drops to 27,000, followed by a rebound after hitting on the support, then I think this would be a very good entry point for long positions. As you can see, we're about to have a golden cross below the baseline. After this golden cross is formed below the baseline, what we need is a small pullback. A small pullback. If the price can find support at the 27,000 level and then move upward, I think it would be a good time to open a long position. This is especially true if we see a decrease in bearish volume and an increase in bullish volume during the uptrend. I reckon it's a good opportunity. Okay. However, if the price breaks below support with huge volume, it will be a different scenario. If that happened, I would even consider opening a short position myself. Let's see. Now, we can see a false upside breakout here, followed by a true downside breakout. Well, at this downside breakout point, there was a chance to open a short position, but I personally didn't do so because the volume wasn't sufficient. Of course, you could still make a decent profit by trading short term, but as you can see, if you didn't open a short position, the moment the price broke down this trend line, the price quickly found strong support around the 27,000 level below here. If you open a short position at this support level of 27,000, it would be highly inappropriate. At the very least, we should wait until this support level is broken. And even then, we should wait for the volume to increase before opening a short position. Now, let's put it this way. If the price really does break through the support, is there a chance for a major bear market? Personally, I think the chance is relatively small. Why? We can look at funding rates to understand why. Speaking of funding rates, let's look at the current funding rates across various exchanges. You can see that Binance is lower than its base fee rate. OKX's is almost zero, right? It is much lower than the base fee rate. Bybit, Gate, BitGet, and Coiniax have funding rates lower than the base fee rates. This indicates that the market sentiment is bearish. However, since the bearish sentiment is already so strong, it would be difficult for the market to reach a peak and produce a crash. Let's take a look at some data to support our analysis. The current funding rates cannot prove what has happened in the past. So, let's examine a chart to see what has been going on. As we can see on the chart below, the funding rate is clearly lower than the base fee rate, which is 0.01%. The funding rate is obviously lower than 0.01%. This has been the case for some time, not just during the current period. Now, let's look at another indicator, not MACD. We can put MACD aside now. All right. In the past, we're using BitMax because they provide a complete chart. Let's look at the funding rates in some previous situations, such as before March 12th and after the 2019 bull market. What were the funding rates? Let's assess the period before March 12th. You can see a significant drop here. The crash on March 12th. This is a daily chart. After the crash, the funding rate became quite exaggerated. Let's examine the funding rate and market sentiment before the crash. All right, let's check out the market before March 12th. The market before the crash. As you can see, we can interpret the market atmosphere in this way. The halving event was around the corner. Everyone knew it. Everyone in the crypto community was aware that the halving event was coming soon. So, the sentiment was quite bullish. As you can see, the price here was not rising quickly or dramatically, but the funding rate was skyrocketing. After the rate increased, as you know, many people bought spot goods and opened long positions. However, the market soon began to correct and eventually crashed on March 12th. At that time, the funding rate was extremely high, which was scary. Let's look at the earlier period. After the end of the small bull run in 2019, the price formed a top at the top of the market. Let's examine the market. During this period, you can see that, the funding rate was initially very high, at least until the end of the bull run. As the price approached the top, the funding rate skyrocketed. When the price rebounded, the funding rate dropped a little, and the price rebounded, and the funding rate dropped a little again. But you can see that before the crash, the funding rate remained relatively high. At least it didn't deviate too much from the base fee rate. Then we experienced the crash. Now, if we compare it to the current market, what can you discover? We can see that the sentiment for long positions is not very strong, and the funding rate is not very high. If we want to use more objective data, we can refer to the data about the funding rate from CoinGlass. And how long has the duration of the current uptrend been? If we calculate from the starting point to the current highest point of this small bull run, it has been approximately 100 to 103 days. Around 100 days. This duration is actually very similar to the previous bull market. The price surge in 2019. I would say that this current uptrend is the true bull market, and it is worth seizing the opportunity. It has been smooth and lasted for about 140 days. However, if we measure from the current time, there are only about 30 to 40 days left, which means there will be around 1 month for this market to go super bullish. But the time is running out. The time is running out. All right, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.